Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 4th of March, 2022. It is non-farm payroll day. And here we are, a lot of news risk still and a lot going on. It's been a busy week. So, this is episode number 2184. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's where we stand. You can see Europe took a beating overnight, 3.5% off, and just holding. We have been down. We were down about 60 to 70 basis points in the U.S. markets, and we expanded that loss versus yesterday's settlement by a little bit more since about when the Europeans opened. So overall, risk off. As you can see, the posture overnight's risk off. Key earnings, none. What is driving the market? The news overnight was that a Ukraine nuclear power plant, the biggest in Europe, was hit by an artillery barrage or a missile. There's some video footage of a missile, and that the plant was on fire. Of course, there was a concern of a Chernobyl type of uncontrolled reaction type of event. So Europe sold off very strong, and so did the rest of the markets. Thanks for the sound check. So did the rest of the markets as a result. It turns out the fire was put under control, and there was no nuclear reaction or uncontrolled radiation or anything like that at this moment. So the market recovered a fair amount, but we're still trading weak versus yesterday. We also had non-farm payrolls this morning and unemployment. Non-farm payrolls came in at plus 678,000 versus the expected 400,000. The prior, which was 467,000 plus, was revised up to 481. 2-month net revisions plus 62,000 jobs. So this is quite positive for the jobs markets. Private payrolls really had a blowout, 654,000 versus the expected 378,000. And the birth death forecast is plus 156. The prior is negative 114. So the other one, the other big number is the participation rate, which I don't see in front of me. I lost that in all these numbers. The unemployment rate came in at 3.8% versus 3.9%. So this is an outstanding report showing strength. Of course, given the environment that we're in, average earnings year on year came in at 5.1% versus the expected 5.8%. Remember, inflation has more staying power with rising wages. This is why we do whatever we can in the U.S. to keep the minimum wage down. But the average earnings year on year came in at 5.1 versus 5.8. This is actually a relief for those who fear inflation because earnings came in lower than expected. So overall, this was a very positive report. However, the market responded with a pop higher in the U.S. markets and then basically coming back to the SOC or the point at which the news was had hit the tapes. So it's very interesting. I'm sure POTUS is going to come out and talk about how great these numbers are. All politicians do during their tenure. So we'll be looking for comments on that. Going forward, we have the Canada IVPMI. That's a significant number for Canada. That's at 10 o'clock. And then China has its National People's Congress going on all day. And that's really it in terms of news. So let's switch gears here and look at the S&P 500. 450,000 contracts have traded so far. The profile is very balanced. We're trading below yesterday's range. The point of control at 43.25. We're currently trading at 43.18. The thing to note is that the inventory is 95% short, 95% short. And after the sell-off, we tagged settlement so that we were basically unchanged, or as us traders here in Chicago say, unched, as if removing that at the end of the word is going to shorten it. So the market got unchanged after the news about the power plant. Positive news about the power plant came in before Europe opened. And what we've done since is we've held well below yesterday's low. And I have some things to say about that. So the S&P balanced 450,000 contracts. So we've traded a lot more than what we would normally expect. And we have a 95% inventory. 95% of the inventory is short with a range of 91 points. So that range, this range in the overnight session, I want to remind you, basically forecasts the likely range during the day. Why do we say that? Can anybody tell me why we kind of say this? What leads to this kind of thing on a probabilistic basis? It's not a guarantee, but in general, we expect the range to kind of to be expanded. And then again, the point of control and mid and VWAP are on top of each other, which tells us once again confirmation we are balanced below yesterday's range. Here's what I expected yesterday. Yesterday, the expectation is a response back to the prior high and then a push to 44.45. Expected the push down into the composite low volume node and the prior day's high at 99 to find a base and then squeeze into what is the designated key resistance figure at 44.45. The secondary is a push up that comes back, tackles that high, tackles the 44.02, falls in, and then drops into 59, potentially pushing to 43, as we discussed yesterday. That's the responsive scenario. We are playing yesterday off of the fact that the one-time framing was established to the long side, or was being established to the long side. Yesterday would have confirmed it, and it did. Higher high, higher low. So the numbers to remember were 44.45, 44.30s minor, and then on top of that is the 02, 85, 59, and 43. Those are the key figures. Let's take a look at what it did in fact. In our review segment, yes, I'm back at the office. Do not like working from home or starting from home. I find it disruptive. So here's the overall picture of what happened yesterday. Let's remove today's levels. Yesterday, a pretty clear open auction that became responsive, pushed into the prior day's range, pushed into this 44.02 composite low volume node, and then it squeezed higher before a news event crushed it back into the range. And here we are trading against the RTH VWAP, RTH mid. Full session VWAP held and mid held on the first test. RTH could not push through back to the open, and off to the races we go to the short side. And remember, yesterday we're looking for it to fall back towards the point of control, 43.80, and then 59, and then 43.43 was the next area. And look at this beauty right here, 43.43. That low, 43.42 and a quarter. So scenario 2, but really, I have to tell you that despite the way this looks, it's just beautiful. It was tough to trade. It was tough to hang on. Lots of chopping back and forth, and it was easy to get stopped out yesterday. You really had to be quite on your game. And what that meant was you have to be absolutely and positively prepared in the area you want to trade, and then putting on the trade without any hesitation whatsoever. It's too fast, and it jerks around a lot while you're in it. So we saw this drop that was quite beautiful, and then we saw what is a V bottom form right off of the 43. Again, the first test here went to 43.41. This set up actually a very decent long off that low. I'm going to remove these dots. They're proprietary, but there's a lot of volume trading down this low, and we could see some pretty good defense. And then we saw this massive rotation to the positive side, which tells us to lay off the shorts, except in distinct areas. It told us to lay off the shorts, and then overall, it just took this positive bent all the way through into the close. Yesterday, multi-distribution profile, a lot of price discovery. We had a normal variation day, just another day, just like the day before, where the profile is just jagged as hell. And yesterday was the same thing. The point of control moved a fair amount up and down the profile, but what we ended up doing is we ended up having a responsive day right back to that 43.43. If I have to say 43.43 more than maybe 1 or 2 days next week, I'm going to be very upset. It's I've been saying that number so much, and of course, if I turn on the stock zones here, you'll see that the 43.43 is yet again the magnet. It's been the magnet all week. It was the magnet all week last week and the week before that, and here we are stuck in this area. So overall, what the market has done is it's maintained balance between that 4,200 to 45.80, brought down to 44.80, brought down to 43.80, which is yesterday's close point of control right here, 43.80. So overall, we are trading a wide balance, and the market is having a really hard time holding on to higher prices. This is what we have to remember. For those who are swinging or buying calls or something on the long side, it's just a tough battle ahead. This is the type of environment where you hold a butterfly or a straddle or a strangle and expect the market to just remain somewhere in the middle. This is the kind of trade that we have. Of course, you have to do that in options unless you're doing it across calendars and futures. So this is what this is doing. It showed weakness into the close, and it closed on the weak side of yesterday. So our settlement moved from 43.80 to 43.59.25. This is what happened in the overnight session on the reopen. This is a 1 tick by 20 Renko point and figure. We pushed on the open back to the key low volume node, which creates the boundary around the high volume node and the point of control for the day. That's important. The first notch out around a high volume, that's called a key low volume node. Either it could happen in a daily, it could happen in a micro composite, could happen in a composite over many, many days or months. We tested that overnight. It happens to be yesterday's VWAP as well, RTH VWAP, and then boom, the news hits and this thing pops lower. We ended up with a slightly higher low here. So we put in a low at 83.50, and then we put in a second low. We ended up pulling back and pushing lower, putting in a second low, but we missed by a tick. So the second low was 83.75. We revisited that low twice, and so it makes it a bit of a weak low here. So given the overnight stat, I'm seeing this as a strong potential run from the full session mid here where we are, 43.25 to 29. This is your S sandwich for today. I'm seeing this potentially running to the downside. It really did not secure a good bottom. We do have a pretty good excess high, pretty secure high, and we may move away, and we may find ourselves initiative away from this 43.43 again. That's how we're set up for today. Delta relatively weak, just could not, despite the recovery all the way to settlement, the delta could not get back to zero. It's off sides to the short side with inventory being short. So we may see a pop on the open, a slight pop on the open. The inventory short by 95%. So we're likely to see a slight correction in the inventories, but that can happen within 3-4 points before the market starts taking a direction. But what we need to remember today, right now, is that we are below yesterday's low at 41. We are below the day-generated levels, which are the full session mid, full session VWAP, the overnight point of control, and then when the market opens, RTH VWAP, RTH mid, and the developing point of control. Those are the day kind of, those are the levels generated by the market by virtue of simply running the auction, by simply trading. And so to me, this looks like it might rebalance and push lower, and that's going to be my primary scenario. Okay, so yesterday we successfully made a higher low, despite the fact that we were responsive. You can see here that we had a reversal. Then we had this day, which triggered one-time framing up, and yesterday confirmed one-time framing up, but we're opening here. So what we're starting to do is create a composite, a micro composite right in here. That micro composite, the MC point of control for it is 4370. 4370 is the highest volume node in this range here. And that's going to be our, that's likely to be our point of control for the week, by which we can measure next week's performance. So we are opening, and I'm expecting resistance on the upside. I'm expecting that the pushes up are likely to see a battle to buy sellers to put positions on for a rotation down. And the other extreme of this is down at 42.75-ish, 42.75-ish. That's where we're likely headed if we can't get back up there. I don't know if it'll be today, but that's what I'm looking for. So you can see, again, we started making higher lows, which means the trend is higher, regardless of whether it made a higher. Don't care about higher highs. All I care about for a trend up is that they're defending the lows, so I'm looking for higher or equal lows, period. And we're breaking that today after chopping around all week and since last Friday. So we've got the bottom line, we've got overall balance, there it is, 45.80, right, to 44.84, right? And we tested down through the 42.12 and we pushed to 41.08, but we had an excess from 41.08 up from last Thursday and Friday, and now we have this 42.75 to about 44.20, 44.14 range that we're in. And right smack dab in the middle of this range, 43.43. So what am I trying to tell you here? What I'm trying to tell you is be sure that you're not looking through a pinhole. Be sure that you're not running down the field with looking through the scope of your sniper rifle for small details. Be sure to look up and see the terrain. That's the terrain. That's the narrative. That's the context. And so we are pinging around back and forth on top of what is balanced. And so far this week, we have traded the MC point of control is right on top of 43.43, which is a composite point of control, which is also a microcomposite point of control. So to me, this is just really, really, really heavy balance. This is a market that's saying, oh, there's bad news. Oh, there's good news. But overall, we're not going anywhere. Nobody's committing in either direction. So it's facilitating trade. And so what that means is that if you're hedging, this is a wonderful place to be because you have a lot of liquidity and a lot of reasons for buyers to buy and sellers to sell. So you can execute 1 million contracts within the lowest amount of slippage possible because it keeps just coming back through. So you can almost execute it all at one price. So to me, this is what we have. And since we're opening below yesterday's range, below the 43.43, that's expected to be resistance early. That's what I want to leave you with. Okay. So let's take a look at what's expected for today. Do you follow all that? Does it seem like, am I overwhelming you with this information? I mean, you really need to know what the narrative is for the market that you're trading. So here, as we look at what this chart looks like, you can see that really it's been back and forth, back and forth, back and forth, right? So you can see the stock zones. The over-under line, again, is at 87. It was at 84. So the key resistance is up here. Key support is beneath us. This is the magnet. You can see that today's profile has an excess on the top, balance in the middle, and a little bit of an excess down below, but a double bottom down below as well. You can see that we've remained below 4400, 4402. You can see that we've traded quite a bit at 43 this morning. You can see that we are below yesterday's range, and you could see that we are currently in this sandwich right here between the full session VWAP, full session mid, and the overnight point of control. This is what I'm trying to impress upon you. So this morning, I'm expecting an open auction out of range, an open auction. I'm expecting it to trade both sides. Open auction out of range. I'm looking for it to be responsive into the 41.43. I'm looking for it to run out of gas, turn over, and then get us an impulse, bring us back to the overnight point of control in the open, and then off to the races we go. We are likely to start testing. If we're going to go for the overnight stat, I'm not expecting it to push to 43.74. I'm expecting it to have an easier time getting 42.83 and getting to this 42.75 support. Poke support, come back up, and that's all she wrote. So that gives us pretty good range, somewhere between 43 and 43 and 42.75, giving us about 75 points of range. The overnight range is about 92. I believe it's 92. Let me see. 91. The overnight range is 91. And so that's actually quite small. It may extend much farther. It may extend down into the 42.55 to get that overnight range. That's the primary scenario currently. We've broken a one-time framing up, and we are looking weak. The secondary is an open auction that tests lower, but then is unable to squeeze. And then we see our buyers coming in at the 00. Okay, at the century figure here at 4,300, and then comes back to the overnight point of control, and then later in the session we see it take out the 43 and start moving back towards prior settlement. For the prior settlement stat, this is 59. So 00 to 59, about 60 points of range. We're coming into a Friday. That may be all she wrote as well. Okay, so just remember, the goal is to come in knowing your price map, knowing what the market's condition is, knowing where we are versus the prior session, where we are versus the most recent type of trading, to keep a 30,000-foot view on the map. And then we dive in. The market opens and we see pieces move on the map, and then we dive in to take our shots. Okay, and we want to conserve bullets. We want to define the risk of that dive, how much we're willing to risk to try out our idea. That's the goal of these Trader Bites, is to have you expand your view and narrow it down and understand the overall narrative. Again, I wanted to do Where Are You From, but it's been 25 minutes. I'm going to let you go now. Please don't forget to hit the subscribe and like, and to turn on subscription alerts on YouTube. If you don't know how to do that, just click on the YouTube icon if you're on the Edge Clear page, or right under the video, click on the subscribe button. Thanks for doing that. Take care, and I'll catch you on Monday morning. Take care.